Time now for a look at some of the day's business news. Brian Quinn joins us in the studio, beginning with what U.S. President Donald Trump said gave him a very warm feeling, Brian. The U.S. and Chinese trade delegation saying they've made important progress.
That's right. Well, no final deal yet on this latest round of high-level negotiations wrapped up in Washington Thursday, but definitely warm words from both U.S. President Donald Trump and the Chinese trade delegation. Well, the two sides are trying to work out a lasting arrangement to end over a year of escalating tariffs on each other's imports. A 90-day truce is set to expire on March 1st. The U.S. is calling that a hard deadline. An American delegation is now invited to Beijing in mid-February to continue the talks. Beijing has promised to boost its purchase of U.S. soybeans by some 5 million tons. That's part of a pledge to reduce a bilateral trade imbalance that's been a key complaint of Trump's. But it's other issues like forced technology transfers and intellectual property theft by Chinese companies that will likely prove harder to resolve. Here's Trump.
We have to open up China. We're open to them. They have to be open to us. So it'd be so easy for me to make a deal with China, but it wouldn't be a real deal. I could get them to buy more corn than they've ever bought and more soybeans than they've ever bought, and they'd be so happy if I did that. But they're going to do that, but in even higher numbers, but we're going to do a lot of other things.
Well, that optimism on U.S.-China trade helping to brace Asian stock markets in what's otherwise been a pretty lackluster session. New data out shows the Chinese manufacturing sector contracted in January. Tokyo's Nikkei index just barely staying in the green as Nintendo shares lost around 9% there on lower forecasted Switch sales. Chinese markets are mixed. The Shanghai Composite closing up around 1.3%, while Hong Kong's Hang Seng is down just over 0.1%. The Caspian Seoul finishing the day just barely in the red there. Over in the U.S., e-commerce behemoth Amazon reported its third record profit in a row just after markets closed there on Thursday. That boosted by strong holiday sales and growth in its cloud hosting and advertising businesses. Profits rose 63%, that to $3 billion for the last 3 months of 2018. Revenue up 20%. But a slowing sales forecast for 2019 and a raft of planned expenditures have investors spooked. Nonetheless, shares fell 5% in after-hours trading. Well, here in France, a raft of new legislation on the food industry comes into effect Friday. The new regulations will raise the prices on hundreds of products. One of the main aims of the law is to ensure that farmers and producers are no longer forced to take losses on their goods. Luke Schrago serves up this report.
Sandwich spread, alcohol, coffee and cheese, all among products that see a rise in prices across France on Friday of 1 to 10% owing to a new law. In fact, 4% of food products will be affected, mainly big brand names.
Across everything we sell in Carrefour, around 1,000 products are affected. Customers in stores will find several hundred items affected.
The idea, a major campaign promise of Emmanuel Macron, providing relief to farmers who've long complained they've had to sell at prices below production costs. A major thrust of the food industry law aims to end the practice of super discounts by forcing retailers to sell at no less than 10% more than they paid for a product wholesale and barring discounts of more than 34% of a product's value. That means no more 2-for-1 offers, though 3-for-2 is still acceptable. Those increased margins should then be passed on to producers, though industry analysts have their doubts.
It's goodwill. There's no mechanism which will effectively push large retailers and industry to pay back what they've taken from consumers towards farmers.
Those consumers have voiced concern too. The new law and ensuing price rises come at a time of major ongoing protests across the nation, specifically targeting high costs of living.
Well, finally for business, the Midwestern United States is usually pretty well adapted to winter weather, but the polar vortex currently gripping large parts of Central and Eastern America is far from ordinary, with record low temperatures hitting the state of Michigan, home to a big chunk of the American auto industry. Shortages of natural gas, due in part to huge heating demand, has forced factories to close. 18 facilities run by General Motors, Fiat, Chrysler, Ford, and others were closed or curtailed Thursday. The economic fallout from that brief operational shutdown probably minimal, but there could be wider effects from the cold snap.
But there are some bigger questions. For example, for consumers who are going to pay huge utility bills just to keep their houses from freezing, If that money was going to be used for a car, will they buy the car next week or next month or next year? So it's hard to predict.
And a chilling effect, you might say, on the economy there, Will.
Chilling effect, I like that, Brian. Brian Quinn with a look at the business news. We'll be